good. So what I'd like is a third report called the cash flow statement. Cash is really important. It's basically everything that, we can't survive without it, no matter how good our profits are. But we already have a balance sheet that tells us how much cash we have, because cash is an asset. So why do we need another report called the cash flow statement? Well, the best way to demonstrate that is with an example. Let's say business A makes a sale of $10,000 and gets the money. They've got $10,000 in their bank account. Business B makes a sale, but what they've sold is one of their assets called a delivery van for $10,000. Well, they've still got $10,000 in the bank too. Business C has gone and borrowed $10,000 from the bank. They've got $10,000. Looking at the cash balance, I can't tell who's better off out of these three businesses. If I just looked at that number, it's the same. So what I'd like to know is that cash, or if you look at ABC Learning, this is a big Australian collapse, profits, crazy profits, as in by that last year, it has almost doubled to $143 billion. Can I give you the figure for 2008? Of course not, because they went bankrupt. We know that profit doesn't mean you're going to be able to pay your bills. So that's not that big a surprise. Now we know a little bit about accounting. Okay, so why don't we look at cash then? We've got net profit, so we take 2005, net profit of 52 million, but they've got cash of 46 million. That's good. They've made $46 million in cash, so that doesn't explain how they went broke then. Well, maybe there's a change in 2006. There's not. In fact, their cash is even better than their profit. Year 3, it's not better than, but it's still pretty good. They made $123 million in cash and a profit of $143 million. This doesn't explain how they went broke. This is obviously a little more complicated than Enron and Lehman Brothers. So I guess what I need is a third report, and that's going to be called the cash flow statement, because what it doesn't just tell us how much money we have, it tells us where it came from. Divides it into 3 groups. Do I get my money from what's called operating activities? So what that is the money I get from the daily operations. That's a fancy way of saying the money I get from selling goods and services and paying for them too. So if I was David Jones, this is the cash I get from selling all that merchandise in my store. Investing activities, that is the cash made from buying and selling non-current assets. So maybe I have to sell property, some of my vehicles, computers. That's not necessarily a good thing because those assets are gone. Or maybe I get cash from borrowing money. That's not ideal. So I guess when we look at it, they're the 3 places money can come from. That's a good one. Operating, we want to make money from opening the doors every day and buying and selling stock. This is not great because, if you're an individual, forget a business, you don't want to have to sell your property to pay the bills. Then you don't have anywhere to live. You don't want to sell your car to pay the bills because then you don't have a car to get around. Well, a business is the same. And lastly, we definitely don't want to be borrowing money because banks not only want money, they want interest on top of it. So I'd like a report that divides my money into these 3 activities. And when you think about it, money is just a big tank. The cash balance is a big tank. And while the balance sheet tells me where the tank is, maybe the tank has risen up to sort of this level, or maybe it's fallen down to here. What I'd like to know is where the money came from and where it went. So a cash flow statement says your inflows of money come from 3 places: operating, selling goods and services; investing, maybe I sell some properties or vehicles; or financing, maybe I borrow the money from a bank. It also tells us where the money goes. We call that cash outflows. So maybe I spend it on operating activities. That's just running my business, paying wages, paying back people I owe money to, stock purchases, paying for insurance and wage and rent and so on. Maybe I spend the money on buying non-current assets, new properties, new vehicles and so on. Or maybe I pay back the banks. That's called a financing activity. So what I've got now is a much more comprehensive sort of idea of where my money comes from and where it goes. So let's take ABC Learning. Can we tell this story now? Profitable business, making a lot of cash. We don't know why it went broke. Well, let's have a look. We're going to divide our money into operating, investing, and financing. Now, if we make more money, it's going to be above the line. If we lose money from this activity, it's going to be below the line. So, 2005, we can see from operating, we made a little bit of money. 2006, a little bit of money. And then by 2007, our operating activities were making $207 million cash. That's really good. It still doesn't explain why we went broke. In fact, it explains the opposite. It tells us we were successful. Well, why don't we look at investing activities? That is the money we spent on buying big assets, something like a property or so on. We've lost a lot of money. So every year we lost 454 million, 851, and about $1.6 billion. So that's not necessarily a bad thing. That just means they went and bought stuff. They actually went and bought a lot of childcare centres. That's okay. But I'd really like to be able to pay for that by running my business every day. So if we look at that, let's look at 2007. I only made $207 million from running my business. And then I went and bought all this stuff, all these other businesses and childcare centres. I don't have enough money now. So the only way I can survive must be this third group called financing. That's borrowing money. Borrowing money is not good. That's debts. That's debts and interest on debts. Well, let's have a look. The interest and the financing activities are huge. Every year they had to borrow 457 million, 850 million, 1.5 billion. That is a lot of money. Let's take 2007 just on its own. I borrowed this much money to buy some more childcare centres. I could only make that much on my own from running my business, so I had to go and borrow that much money. And now when we know that, we can say, well, okay, they did seem to be making money every year, but most of it was coming from these three, this source here. This, you can see the financing activities. That's not good. I'd like to know where my money's coming from. And that is called the cash flow statement. That's going to tell me exactly where it comes from and exactly where it goes. So together, the three reports, the income statement, the balance sheet, and the cash flow statement, they just tell the story. That is all accounting is. We're going to tell you the story of a business with those three reports, and you'll learn to understand them.